Hello, today is Monday, August 3rd, 2026. Here is your daily signal. According to Fortune, US-Iran conflict has led Chevron and Exxon to post their largest quarterly profits ever, as oil supply disruptions push global prices higher. Historically, tensions between the US and Iran have played a major role in shaping world oil prices because Iran is a significant exporter. Past events like U.S. sanctions in 2018 and attacks on oil infrastructure have triggered price spikes and volatility, forcing oil companies to constantly adjust their production forecasts. This quarter, ExxonMobil saw a 5% rise in profit thanks to crude price jumps following U.S.-Iranian naval tensions, and the International Energy Agency reported a 7% increase in Brent crude benchmarks just this week. Chevron's executives highlighted not only the financial windfall but also heightened operational risks as Middle Eastern tensions threaten further supply constraints. In the near term, these disruptions are likely to boost oil company profits, while consumers and businesses pay more and face unpredictable costs. Medium-term volatility could discourage investment in energy infrastructure and lead to further government interventions, such as U.S. strategic stockpile releases to stabilize markets. If instability persists, the shift toward alternative energy sources may accelerate as confidence in reliable oil supply continues to erode. Next, on to investment strategies amid inflation concerns. Business Insider reports that Societe Generale has published a 7-part playbook for investors seeking safe havens as markets grapple with renewed inflation scares. Soc Gen's guidance comes at a time of heightened asset volatility as central banks respond to persistent inflation signals, and uncertainty spikes in developed economies following years of rapid rate changes. The bank's August 2 report recommends investors rebalance portfolios towards defensive equities and shorter duration bonds, following surprise CPI data in July 2026. Soc Gen analysts specifically highlight real assets such as commodities and tips as preferred hedges for the coming quarters, while portfolio allocation, duration management, and equity preferences are laid out in granular detail. As a consequence, flows into defensive sectors and real assets are likely to surge, causing short-term equity volatility. Persistent inflation could also force central banks to delay rate cuts, impacting growth projections into early 2027. If investors broadly adopt Soc Gen's advice, demand for commodity ETFs and inflation-protected securities such as tips may rise, and policymakers could become increasingly cautious about inflation-related decisions. Next, let's turn to the evolving economics of open source AI. Next Big Future reports that the rise of open source AI is dramatically reshaping the economics of artificial intelligence, with commoditization set to erode profitability for proprietary vendors. Open source AI frameworks, whose code is made publicly available, have enabled rapid innovation and created a landscape where similar products compete mainly on price, not features. Major releases like Meta's Llama 2 and Stability AI's Stable Diffusion have accelerated this trend since 2020. Now, Meta's new Llama 3 update and Hugging Face's launch of the Open Models library, featuring over 10,000 community-contributed AI models, underscore the scale and speed of market transformation. In the short term, commoditization will lower development costs for startups and established companies integrating AI solutions. However, it may also reduce the market share and profitability of closed-source vendors by 2027, with increased intellectual property disputes and regulatory debates as more models become publicly available. Medium term, the open access is expected to accelerate applied innovation and fuel global competition for AI talent and infrastructure, as governments scramble to keep pace with the technology's impact on jobs and industries. Now, onto the markets. Germany's international market was slightly down, with EWG closing at 42.85. France stood out, with EWQ rising to 46.55, while the United Kingdom saw EWU up for the month though down on the day at 48.41. Italy posted modest gains, with EWI ending at 61.6, and Spain was marginally higher with EWP at 61.48. The Netherlands retreated, with EWN closing at 66.82. And Chile slipped, led by ECH at 39.33. Belgium moved little, finishing at 26.94 on EWK, and Australia dipped, with EWO at 42.48. China large cap surged over 12% this month, FXI closing at 36.5. Japan dropped, EWJ finishing at 92.39 on declines, while India inched up, India ending at 49.8. Taiwan was sharply higher on the day at EWT 96.55, despite bigger monthly losses. Hong Kong was slightly lower with EWH at 23.08 but up strongly for the month. Singapore slipped with EWS at 32.28. Indonesia held steady, ITS at 10.89, Malaysia declined slightly, EWM closing at 28.08. In the Middle East, Saudi Arabia showed a small gain, KSA closing at 36.96, Arab Emirates fell, UAE finishing at 18.93. Israel was up for the day, EIS closing at 119.35, while Kuwait also rose, KWT ending at 36.695. Africa inched higher, AFK closing at 26.13. Commodities saw gold and silver down, GLD at 371.54 and SLV at 52.36, while US oil jumped, USO closing at 129.17 for a strong month. Platinum slipped to 14.96. Agriculture was steady with DBA at 27.51. Carbon and copper both nudged up, with KRBN at 33.75 and CPER at 39.56. Natural gas advanced, UNG closing at 10.06 despite steep monthly drops. Corn and wheat slipped, corn down to 17.65 and wheat to 23.81. Uranium declined with URA at 39.07 and lithium also lower, lit at 69.22. Among favorites, Microsoft surged over 20% for the month to 464.72, Nvidia rose to 200.75, Amazon spiked 15% in a day to 271.58, while Bobber rallied to 122.25. Intel dropped over 26% monthly to 90.2. The SP 500 edged up for the day, SPY at 747.03, healthcare dipped at Roman 45 162.55, finance was little changed with XLF at 56.94. Real estate XLRE and rates RWR both eased, semiconductors were slightly higher, SOX at 504.89. Aerospace climbed to 239.66, transportation slipped, agriculture retreated, and clean energy stayed weak. That's it for today. You can find more news and details on our website. Goodbye.